So under today's section, we'll talk about your section C, preparation of single entity financial statements, the workbook questions related to this section. Okay. So before you do this video, before you go through this video, make sure you go through the theory parts that we did on this section, watch all those recordings. Then after that, come and do these questions. Okay, so these are the type of questions that you can get for your exam. Hope you will get an understanding from this area. So first we have define the business entity concept as it applies to financial statements preparation under Sri Lanka accounting standards. So first we have the business and the owner are treated as the same accounting unit of accounting purpose. That is not true. No? So under the business entity concept it says the owner and the business are two separate elements. The owner and the business are two separate elements. So if you look at the second one, the business is treated as a separate economic entity distinct from its own. So that should be the correct answer. If you look at the other two, only incorporated business need to apply business entity concept. That is wrong. Every business has to record, has to take into consideration. The concept only applies to business with multiple owners. That is also wrong. There is nothing like that. Then if you look at the second one, identify which the following represents a complete set of financial statements according to the case one. So we are looking into all the financial statements. Now, first one, only SOFP and P&L. That is wrong. Second one, SOFP, P&L and notes. That is also wrong. But D, look, SOFP, P&L, statement of change in equity, cash flow, policies and notes. So it should be answer number C. Next question, we are differentiate between the items that should be included in profit or loss and other comprehensive income. So all income and expenses go to profit or loss. Other comprehensive is only extraordinary items. So here all income and expenses don't go to profit or loss. Because when you say all income and expenses, there is revaluation of assets also. That includes other comprehensive income and income loss. So that doesn't count. Operating items go to profit or loss. So that is true. Financing items are the comprehensive. That is wrong. All principal, all income and expenses go to profit or loss, except in exceptional circumstances where other comprehensive income provides more relevant information. That is so, no? All income and expenses. If there is more information related to other comprehensive income, so those would go to other comprehensive income. So it should be C. Then we can move on to the next section. Interpret the significance of the guidance vacuum mentioned in the financial reporting discussions. So here it refers the gaps in international accounting standards. No. B, it describes the absence of Sri Lanka specific technical guidance and so here if there is absence, you follow the guidance vacuum in the financial reporting module discussion. So it should be answer number B. Next, we have described the 5-step module of revenue recognition according to SLFR 15. Now, as we know, when it comes to SLFR 15, in that it says how to recognize your revenue. I spoke about this when we were doing the income statement part. So based on SLFR 15 only, you recognize your revenue. So there is a process how you recognize your revenue. Keep that in mind. So here the process is first a contract should happen between the business and the customer. Next is identify the performance obligation. Now the performance obligation would be what you are going to provide to the customer. Maybe it could be goods or maybe it could be a service. Third is you decide the transaction price. You are going to decide, okay, I'm going to give it at this price. Next is you allocate the performance obligation. You allocate, okay, for these type of goods, this is the amount. These type of services, this is the amount. and you allocate. And after that, when the service or good is provided, you can recognize that amount as a revenue. So based on that, the process is, it should be answer number B. That's the process of recognizing your revenue. Just have an idea about the process, that is important. Because I didn't mention that when we are doing the theory part. We can move on to the next part. Summarize the key components required in the financial statement of profit or loss and other comprehensive income. So revenue, expenses, net profit. No, there is more items that could be included. Revenue, cost of sales, gross profit, operating expenses, finance cost, tax expense, profit for the period, other comprehensive income, total comprehensive. That includes everything, right? So that should be the answer there. Sales, purchases, no. Income, expenses, comprehensive income only. This is also correct, but this is more correct. This includes all the items. Remember what we learned in the income statement. Then you have list three main categories, activities in the statement of cash flow. That is easy. We know that is operating, investing, and financing. Next, illustrate how statement of financial position and statement of profit or loss are interconnected. Remember, we learned the interconnection. Here, they are completely independent statements. False. Profit or loss affects retained earnings in equity. The balance sheet items affect income statement through depreciation and interest. That is so. Now we learned. Remember, P&L we record under retained earnings. Depreciation and interest affects. You record that in your income statement. Only through cash transactions? No. They are connected only through comparative figures. That is also false. Correct answer is B. Next, describe the main components of statement of change in equity. So it should be opening balance and profit for the period and closing balance. There is more. You can include dividends, contribution from owners. So second one, opening balance, comprehensive income, contribution from owners, distribution of owners, and closing balance. That is so. No? Share capital needed on share capital can come, but there could be revaluation reserves also should be added here. Current year changes and prior year comparatives only. No. You include the if there's other any revaluation reserves, you include those also. Next, identify which item would typically require disclosures in the notes in the financial statement. Notes would require only accounting policies and liabilities. No. Policies, estimates, breakdowns of financial items, post-reporting period events, all of that. Remember, we came across that when we were doing the theory part. Only comparative figures and previous years, that is wrong. Management discussions, analysis, not only that. Then we can move on to the next section. So here we have been given some information. Based on this, we have to do 11 and 12. We have 2029 information, 2030 information. First, we have to get the gross profit for 2030. Gross profit, you know how you get. From your sales, you deduct the cost of sales. Sales minus cost of sales, you get gross profit. So here we have to get for 2030. Now you can, from your sales, you can deduct the cost of sales. Now these are the way how you can get questions. 22,294 minus 20.083. Then you get 1211. So it should be answer number 1. Next, for 2030, we will get income from operating. Income from operating. So here, during 2030, we got the gross profit, which is 1211. Next, from that, we have to do, so this we have to add the other income. Other income we have 82 and minus the expenses, which is admin expense that we have 419. Then we get operating profit. 1211 plus 82 minus 419. Then from this we have to deduct the interest, which is 75. No, we don't have to deduct the interest. No? So here operating profit is 874. Income from operating is. Here we deduct the interest 75 and we get profit before tax. So that will be minus 75. We get 799. From this we can deduct the tax, which is 201, and get profit after tax. Now they haven't asked this, you can just get an idea from this. So get 598 profit after. But here they are asking operating profit, so should be 874, answer number D. In the next set of questions, we have a drag and drop question. So here we have the financial statements. We have to drag and drop over here. So first, how much is the business worth? So your worth you can get from your XOFP. What is the current value? Through your equity you can get. So that should be B should come here. How much is dividend paid? Dividend paid you can get through your it should be the statement of change in equity. It shows no, when there is a dividend payment, so that will be using your retained earning balance. So it should be answer number C here. The profitability of the business you can find through your income statement. So A should come here. What is the method of depreciation? That you get through your accounting policies, or in other words in your notes it will be disclosed. So D will come here. 20th, again we have a drag and drop question. So under which activity it goes on? First one, a cash received from sale of plant and equipment. So something you have invested in, now you are selling. So that should be investing activity. Investing activity, so I'm going to write IA. Cash advance made to third parties. So we have given an advance. So that should be a financing activity, no? How we finance, how we give out funds and how we obtain funds. So that should be FA, financial activity. Next you have depreciation. So depreciation is a non-cash item. NCI, non-cash item. Cash received from customers that you get from daily operations, operating. So under this we have to get net cash flow from operating activities. Now here keep in mind, now when it comes to cash flows, remember there were two methods, direct method and indirect method. Here we have information related to your indirect method. So what you do is you convert your profit before tax. Now here tax is now given, so we can assume that there is no tax inside in this organization. This is 60. You have depreciation, which is a non-cash expense, so that should be added back. Because depreciate una kiyala, we don't go and pay anyone, but when you calculate the profit, we deduct that. So due to that, you have to add that amount back, which is 50. Proceeds from sale of land. Now that is the cash amount that you have gotten, so that you don't record. If there's a gain or loss from this sale, that you will loss. Increasing current assets. So I told you the relationship between current assets and current liabilities when we were doing the theory part. So here, if current assets increase, cash flows will go down by 30, and decreasing current liabilities decrease. So cash flows and current liabilities, there's a positive relationship. If current liabilities increase, cash flows also will increase. Current liabilities reduce, cash flows also will reduce. So here it will go down by Fine. Purchase of equipment, that's a investing activity. Then you can adjust. Here you get then 40. So that should be answer number A. Then we can move on to the next part. So what we have to get is the net profit for the year. Net profit for the year. So first on top, then we can calculate your sales. We do without zeros, that's easier. So 2769. Then you have to do the cost of sales calculation. Actually, we'll do it here. Sales 2769. Then you'll do the cost of sales. Opening stock, we have 530. Plus purchases, we have 910. So you basically calculate the cost of this sale. So to your opening stock, you add the purchases, and whatever is remaining, you never sold them, so that won't become a cost for you. So that you deduct the closing stock. 485. Then when you simplify this, you will get the cost of sales. So 530 plus 910 minus 485. You get 955. From 955, you deduct the sales. When you deduct the sales, you get the gross profit. Now here, sales, there is a sales return also. So you deduct the sales return. No? So from this, you can deduct the sales return value, which is 24. Then you can get the net sales. 2769 minus sales return 24. Then you get 2745. From that, you deduct 955. Then you get gross profit as 1790. Then to that, we have to adjust the other income. You add the other income. Apart from sales, if there's any other income, you add that. 87. And deduct the expenses. So you have admin, distribution, and interest. Now, when you're recording admin, keep in mind there is a small adjustment that you have to do. It says wages and salaries accrued. That means an expense that we have to pay this year, but we still haven't paid. But income statement, we make it to the accrual basis. No? So this admin then therefore should be added to your expenses. Even though it's not paid, but we still account whatever the expenses that are relevant for this time period, for the accounting period. So to your admin, 356, you have to add 70. 356 plus 70, then you get 426. Then distribution, you have 175, but keep in mind here selling and distribution expense includes the prepaid advertising expense third. Prepaid means we have gone and paid for the next accounting period. Now that is not relevant for this year, so that should be deducted from here. That should be deducted from here because it is not an expense that you have to account for this year. When you deduct 30, you get 154. 154. Then here when we do this calculation, we'll be getting profit before tax. So 1790 plus 87 minus 426 minus 145. You get 1306. From that, you deduct the tax. Yeah. tax. Also we have to, I didn't deduct the finance expense. No? So we have to adjust the finance expense of the interest. We also have finance expenses, which is 76. So again, we'll do the calculation 1790 plus 87 minus 426 minus 145 minus 76. Then you get 1230 PBT, profit before tax. From that, you deduct the tax, which is 198. Then you get 1032 as profit after tax. Profit after tax. So the answer number B. So I hope you understood that part. And we can move. So make sure you do the workings. Write this down. We can move on to the next part then. So we have to get the correct thing relating to your statement of cash. Investments in 91 days in treasury bills can be categorized as investment activities. No, that goes under cash and cash equivalent. Anything which you can liquidate within 3 months would go under cash and cash equivalent. Next, changes in bank overdraft should be considered under the change in working capital. No, again, bank overdraft affects cash, so that would go under cash and cash equivalent. Proposed dividends of ordinary shareholders do not have an impact on cash. That is true, no? We still have proposed. So in the annual general meeting, shareholders have to approve, then only we pay. So it should be answer number C. Interim dividend paid at the end of the year do not have an impact on cash. No, it does. When you pay, financing activities reduce. So cash flow reduce. We'll move on to the next question then. So we have to get earning before tax, profit before tax. So this is a bit of a tricky question because normally they give us this. We do the adjustment and we get net cash flow from operating activities. So we get the net cash flow, but in this case they have given us this, but we have to do a backward calculation, upward calculation. So here net cash flow is 4380. We'll record that. Now all these items, whatever we have to do, we'll do it here. So if you take depreciation, depreciation is added. Next, gratuity paid, you deduct. Gratuity paid. Or loss on disposal of PP. So here this loss is deducted from your profit, so this should be added back. Disposal loss, you add back 120. Interest paid, deduct. Interest expense, keep in mind, now when we calculated the profit, we deducted that, no? And we arrived at that. But here again we deduct interest paid, so then we have deducted it twice. So in order to avoid that, the expense of the year you have to add back. Interest expense, which is 250. And gratuity provision, provision is how much of provision that we did. What we actually record is the paid amount. That should be deducted. So gratuity provision should be added that because when you calculated the profit, that was deducted. But what you actually deduct is the paid amount. So gratuity provision, we have 850. Your data has gone down. Decrease in trade receivables. Now you know current assets go down, cash flows will go up. Cash flows will go up by 1000. Tax paid, you deduct. the amount of taxes we have paid. So keep in mind, I didn't follow a proper structure, the format and all. So you don't have to follow a proper format when doing this. If you know what to do, okay. So you can, since these are short questions, you can do it like this. So here, when you're going backwards, keep in mind whatever you do, you do the opposite of that. Then make a make. So here this should be added back. This 200. Whatever you do the opposite. So to 4,380, you add 200. Here make add velane. So this should be deducted. 1,000 you deduct. 850 you deduct. 250 you deduct. 50 you add back. 120 you deduct. 40 you add back. 400 you deduct. Then you get here the value as 2050. It should be answer number 8. Okay. Next we have a theory question. They are asking what is classified under financing activities. Dividend payment, yes. So if someone has invested, we have to pay a return. Yes. Lease liability, a liability, no? That we have obtained funds from leasing company. And issue of debentures also, that's the source of financing activity. So here all three come. Answer number 8. Then we can move on to the next question. So make sure you make a note of this. So here we have to get profit for the year. Again, profit for the year. So on top you have sales. $250,000. And then you have to calculate the cost of sales. So how we get cost of sales is opening stock. You have 10,000 plus purchases. You have 100,000 minus closing stock. You have closing stock is given below under adjustments. Closing stock inventory balance is 15. So we are doing without zero. So ignore the last 3 zeros. So we take 15. And after that we can get the cost of sales. But before we get the cost of sales, here we have a small inventory adjustment that we have to do. Mr. Pereira owner used plywood door which cost of 150 for his personal use. Now out of these opening stocks or purchases, he has taken 150 for his personal use. No? So then keep in mind here this should be adjusted. We have to remove this from cost of sales. Cost of sales credit or drawings account debit. That's a double entry. So we will remove it from here because he will be taking either from opening stocks or purchases. Now we are not going to sell that anymore. That 150. So here this 150 should be deducted from. Since we are doing without zeros, ignore the last 3 zeros. Yeah. Then you can simplify this and get the gross profit or cost of sales, and we can arrive at our gross profit. So here we get 10,000 plus 100,000 minus 150 minus 15,000. We get the cost of sales as 94.80. From this we have to deduct the sales, then we arrive at gross profit. So we get the cost of sales. From cost of sales we have to deduct the sales, then we get the gross profit as 155.150. Then to this we have to add the other income. Now here keep in mind when we are calculating our other income. Now, here make this 2029. 2029 plus 150 plus 100 plus 150 plus 100 plus 150 plus 100 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 plus I will correct that when I'm uploading the workbook. Here we have to make for 2030. No? Now if we take our counting period, it will be from 1st of Jan 2029 to 31st December 2030. But here this fixed deposit that we have obtained, it matures on 30th 6 2029. So this is there from this date to this date. So then we have to calculate the interest only for 6 months. So we know the rate, which is 50. 50 into 15%, but that into you take only for 6 months. So 15% you get, then cut these two zeros, 500 into 15 divided by 2. So check, you should be getting 3,750 as your interest. Now here interest is given, no? 75 here, but that is the amount that you have obtained at the moment. Now you're supposed to get this total amount, but out of this total amount you have only got 75. Okay, so 500 into 50. Yeah, here you get then 3,750 as other income. Then we have to record the distribution, accrued electricity and admin. Admin, you have to adjust the electricity as well. No? It's accrued. No? Then altogether we have 412 admin. And distribution we have 600. When we deduct this, we can get the net profit for the year. So here we get 157,888. Yeah, I think here there is a small typing error, so this should be, sorry. Yeah, metana make it 157,888. 157, it should be answer number 1. Small typing error, it should be 157,888. What do you got? Then we can move on to the next set of questions that we have. 27, Cloud PLC has reported loss of 450. Net loss 450. But the company has undistributed profit of 800 from the previous year. Which of the following statements are correct? Company pay dividends because it made a loss. Cannot pay dividends. That is not true. They can still pay dividends because they have undistributed profit this amount. Cannot pay dividends with undistributed profits from previous year. No, you can pay. Can pay dividends up to 800 because there are undistributed profits. Not up to 800, no? Because you have last year profits 800. First, you have to set off this loss. From the remaining amount only, you can pay dividends. So here should be answer number D. Can pay dividend not exceeding 350. That is true. No, you should have minimum you can pay is this amount because from 800 you have to set off the loss 450. Then you get 350. Next, they say a trainee has paid draft financial statements and they have made a loss of 250. There is a surplus of building revaluation of 400 during the year, which has been omitted from the draft financial statements. We had a surplus. The building was revalued for the first time and it had resulted in a loss of 220. Here, first time we had a surplus, sorry, first time loss, second time gain. Now, First, we'll summarize the information. So, if you take the building, first time we had a loss of 220. Now, second time we are getting a gain of 400. Now, our net loss is given, which is 250. Net loss is 250 minus. But here, this revaluation, they haven't accounted. They have said they haven't accounted. Now, how we will account this is, initially what happened, you have to set that amount off. Now, we are making for this year. Current year is second time revaluation for this year. We are getting a gain of 400. First time we had a loss where we recorded as an expense of 220. So first we have to set this amount off. Make a set karanna, set off karanna. You have to add 220. No? So we recorded as an expense 220. We have to add back 220 to this because this was never recorded. Now the current net loss is, the corrected loss is only 30. Now here remember, out of this 400 we set off 220. Then how much is remaining? Only set off karama out of this 220, 180 is remaining. Now this is the amount that you record as a gain. Simply. Because first time we had a loss of 220. Second time you are getting a gain of 400. But gain is not 400. Because last year there was a loss of 220. So you set off that first. To set that amount off, you have to add back 220 of your profit. Because expense account is record correct. Now to remove that, you have to add back 220. The remaining portion is the gain, which you record under other comprehensive income. Other comprehensive income, 180. Now you know profit. Now this is the profit now, or profit after tax. Plus other comprehensive income, you get the total comprehensive income as 150. So it should be answer number D. Loss of 30. We corrected this, we got a loss of 30. Total comprehensive income is 150. So hope you understood that part. We can move on to the next set of questions then. This is a good question. No? We have to get what is correct related to your statement of cash flow. Statement of cash flow provides historical information about the cash and cash equivalent. That is true. No? What happened previously. You can't forecast the future. Statement of cash flow useful for indicators of companies' liquidity and solvency. That is true. Because it shows how much of liquidity that you have, cash that you have. And solvency is whether you're going to be liquidated soon or not. Whether you're going to be banked up. You can get an idea from the cash flow. Statement of cash flow shows the source of use of cash. That is also true. It shows cash inflows and outflows. It's prepared on cash basis, so that is also true here. All four are correct. Next, we have to get the year-end cash and cash equivalent. Now, I have told you year-end cash and cash equivalent is your opening cash and cash equivalent. You add the net increase or decrease in cash and cash equivalent. So, net increase or decrease, how you get is the addition of operating, investing and finance. So, this is what we call net increase or decrease in cash and cash equivalent. So here it should be to get the closing, the addition of everything. So addition of these three will give us the net increase or decrease in cash and cash equivalent. So that you have the opening balance. So when you do that, see 825 plus 350 plus 450 plus 280. Then you get, add everything, you get 100,905. Then you can move on to the next question. We have a few theory ones. So first, choices of classifying expenses based on function or nature in the financial statements depends on historical factors. That is true, but there is more items that you consider. Nature of the entity, that also you can take, but there is more items. Historical factors and industry factors, not only those. So D, check historical industry factors, nature of an entity, you can take all of these. Based on that only you calculate the profitability. D, an automobile spare parts trading company receive dividends. They are getting dividends for investments. From that itself you can get an idea. You have invested, you get a return. So this should be then investing activities. Investing activities. Next, which of the below statements are correct in respect to section 48 of Companies Act number 7 of 2007. Every company must keep accounting records correctly to be able to determine the financial position of the company with reasonable accuracy at time. So that is true. No? You have to maintain all accounts of your assets, liabilities, and equity. Every company must keep accounting records correctly to enable directors to prepare financial statements according with the Act. Yeah, the main responsibility of preparing financial statements sits with the directors. So they are also responsible. That also you can take. Every company must keep accounting records correctly to enable financial statements of company to be readily and properly audited. So that also you can take. So financial statements should be, all financial statements you need to have by doing an audit and keeping it readily available. So it should be answer number B. Next you will take what falls under your equity. So ordinary shares come. Redeemable preference shares comes under liabilities. Revaluation reserve comes, debentures also comes under liabilities. So it should be 1 and 3. Next, we have to get the correct value of our retained earnings and dividend per ordinary shareholders. So currently we have our retained earnings value this amount. We'll see what they say. Here, interim dividends paid during the year and proposed dividends for ordinary shareholders is these amounts. And preference share dividends were also declared. You have to pay a preference share dividend as well. Now, as you know, dividends you pay out using your retained earnings. And also profit for the year is this amount. Now you know profit where you record under your retained earnings. So this should be added here. 1,450. And dividends you deduct, which is 300 and 340. And also we have to deduct the preference share dividend, which is 12% of this value. So you can get 12% of 5,250. 5,250 divided by 100 into 12%. Then you get 630. So 630 also you have to deduct. Then you can get the closing amount of your retained earnings. 1,970 plus 1,450 minus 640 minus 630. Then you get 2,150 as your correct amount. Here dividend for ordinary share is, so it should be this one, answer. Dividend for ordinary share is how you get this. Again, per share, how much is the dividend? You know the total dividend was, now preference you don't take because that's just a fixed return that they get. You take the variable return, which is 640. You know the number of shares, which is 200. When you deduct this by 200, you get 3.2, which is answer number D. We can move on to the next question then. So here we have a question related to your bonus issue. So they are asking after the bonus issue, what is your equity and your stated capital. Now keep in mind, I'll just do it here, it's easier for me then. The company decided to capitalize its reserves. In this regard, the company used 2 new shares for 1 3 shares here. For every 3 shares here. So here what happens is, if you have 3 shares, you'll be getting 2 shares free. Okay, so currently we know the ratio 2:3. Currently we have how many shares? 300 shares. Then we'll be issuing as a bonus issue 200 shares. Bonus issue 200 at a price of how much? Which is 25. At a consideration of 25. So 200 into 25. We get 5 million. Now keep in mind how we will give this is, we remove from retained earnings, we use one of our reserves and we add that to our stated capital. Now see, your new stated capital would be 12,500. New retained earnings would be 2,410. Revaluation is 4,500. Nothing happened to that. Yeah, that is your equity, right? You don't take debentures because why? That is not coming under equity. That comes under non-current liabilities. So add everything and see, you can get your equity. 12,500 plus 2,410 plus 4,800. You get 19,710. But keep in mind, here for this debenture issue, 15% interest should be paid. So interest is what? An expense for us. So that should be adjusted. So on this you calculate 15%. Then you get all these zeros. 600 into 15, you'll be getting 16 to 15. So we are doing without zeros. Ignore the last 3 zeros. These 2 zeros you can cut to these 2 zeros. 16 to 15.